VT now has completed 14 years of its existence, and we want to give a huge thank you to you, our viewers, for making this journey ever so memorable and so wonderful. Let's begin then by introducing and starting off with Rajan Anandan. Now, we all know that Sequoia India and Southeast Asia, the largest venture capital company in the region, managing over $9.2 billion across 13 funds, is now going to be known as PeakXV Partners globally. Let's connect with Rajan Anandan, who's Managing Director at PeakXV Partners, as well as Search, to understand why it's the best time to invest in India, his outlook on profitability for projections for new age tech companies, and what he believes the next big theme is going to be. Rajan, such a pleasure having you on board. Thanks so much for joining in. Now, you have said that the next 20 to 30 years in India, it's India's game to lose, because we've got the talent, we've got the ecosystem, and we've got a generation of companies that are very good. Can you elaborate a little bit more about the startup landscape?
Yeah, I think, this is absolutely the time to be building companies in India. It's the best time to build. It's the best time to invest. What we're seeing from an investment climate really is a back to normal scenario. I think everybody's sort of very worried about what on earth happened here. I think the simplest way to think about it is if you go back to 2010, which was only 13 years ago, there was less than $1 billion that went into startups every year. That really started increasing, I'd say, after about 2014 or 2015. And if you go to 2019, actually 2020, the year of COVID, we were at 10 billion, right? And then we had two really years that were the exception, not the norm, right? 2021, we had over $40 billion come into the Indian startup ecosystem. By the way, globally too, that number was over 700 billion. Which had doubled. And 2022, especially driven by the first half, we were at about 25 billion, right? So both of those years, and especially 2021, was really the exception. And this year, if you look at it, first quarter, I think was about 2.5 billion. We're going to trend line between 10 and $15 billion of startup funding in India in 2023. And I think what's important to do is look at what has happened to our ecosystem from a funding standpoint over a period of a decade. And if you actually look at that chart, we are pretty much on the right trend line, right? So I think a lot of folks, startup founders, investors, members of the media, get very, very worried about what's really going on. I think to keep in mind that 2021 was the exception. It isn't coming back for a very long time. And we're pretty much back to trend line. So today, if you look at India today, there is more venture capital dry powder, right? That is investable capital raised by India dedicated funds than we've ever had before, right? So there is no shortage of capital. If you look at early stage, so seed and Series A, it's very, very active. What you've seen is a slowdown in growth funding or late stage funding. And that's primarily driven by the fact that, our best late stage companies raised a lot of capital in 2021 and first half of 2022. So they don't need to really raise capital. And today also, there's a much bigger focus on unit economics, a path to profitability. So the late stage companies that will raise capital over the next, let's call it 1, 2, 3, 4, 5, 6 quarters will have very, very strong unit economics and a clear path to profitability, right? So growth stage investors today really don't want to invest in companies that are losing a lot of money. So really, this is what normal looks like. In many ways, this is the new reality. And I think it's important that everybody sort of gets used to that idea. But really, it's not quite different. It's the trend line that we're on. And so we think we're on a very, very good wicket as we look at, the next 7 years leading up to 2030 in India.
Sure, and Rajan, what about the correction that we've seen in valuations, the kind of layoffs that we've witnessed of late? When it comes to fundraising as well, that has slowed down quite significantly. Do you think that to a certain extent has reduced the attractiveness in India? Or is it the right time to invest in India as now companies are shifting towards profitability, which we've seen over the past year or so?
Yeah, so I think there are multiple questions there, right? I think the first thing to keep in mind is the current environment that we're in is the best thing that has happened to our startup ecosystem in a long time, right? Why do I say that? Because at the end of the day, enduring companies are built because they get to not just being profitable, to being very, very profitable. And over a period of time, they start generating hundreds of millions, if not billions of dollars of free cash flow. Today, you look at the startup ecosystem, especially at sort of, let's call it the growth stage, there is only one focus. The focus is to get profitable. Right. And I think that's very, very good, because if you look at a lot of the narrative around the Indian startup ecosystem, there's been a lot of, there continues to be a lot of excitement. But I think one of the questions has been, where are the profits, right? What I can tell you is every single late stage company today, whether they're public tech companies, you know who they are, or whether they're private sort of late stage companies, right? These are companies that have raised, call it that are Series C, Series D and beyond companies. 100% of them are focused on improving their unit economics, getting to profitability, and not just getting to break even, but getting to meaningful profitability, right? And I think that's a very, very good thing, because at the end of the day, look at the greatest companies that we all admire, the companies in India, companies like TCS, the Tata Group, Reliance, HDFC. These are all very, very profitable companies. Globally, you look at it, right? Google, Facebook, Amazon, these are all very, very profitable companies. So I think what you're going to see over the next 18 months, if I was to sort of say what is the end of 2024 calendar going to look like? It's going to look like where almost all our public tech companies are going to be very profitable. And you will see a large number of the private growth stage companies that will turn the corner on profitability, or at a minimum, will have a very, very clear line of sight on how they're going to get profitable. And I think that's a very, very good thing. Now, in terms of valuation, right, I think that's, again, it's important to keep in mind that 2021 was a black swan year, right? We had $7 trillion that went of liquidity that went into every asset class around the world. Public equities, right? Stock markets around the world got to an all-time high. Private equities, real estate, crypto crossed $3 trillion, right? So it's not just one asset class. It's not just about India. It's about globally. There was an enormous amount of liquidity that went into every asset class that obviously led to an appreciation of prices across the board in every asset class. What started happening starting in early 22, as you know, is that environment started changing, right? Interest rates were zero. Interest rates started rising. As interest rates started rising, you know, if your public stocks started correcting, because all of a sudden now I've got to use a discount rate in my valuation that is not zero, that is 1, 2, 3, and now 6, 7, 8, 9%. So when public market valuations correct, private market valuations pretty much follow. And now what we are back to, as I said, is this is the new normal, and this is really what it should be. So it's not something I think everybody gets worried. See, the thing is, if you're worried about the black swan year, thinking the black swan year is the normal, that's not the right way to think about it, right? The question really is, are we on the right trend line? Are we back to normal? Are very good founders starting up? The answer is absolutely yes. Are very good companies getting funded? Absolutely yes. Are companies now very focused on getting profitable? The answer is absolutely yes, especially the late stage companies. And that's a really good thing for India. That is a very good thing for India.
Oh, yes, indeed. And of course, the company is known for very successful investments in companies like Google, Apple, WhatsApp, etc. So I want to understand from you, going down the line, which are some of the sectors that you believe will experience a significant disruption in the near future? And do you think that companies back home in India can really encash on these opportunities?
So I think the important thing about the Indian startup ecosystem, right? Our entrepreneurs have a very, very unique opportunity. One, they can innovate for India. And today what we are seeing is, sort of a Cambrian explosion of innovation across many sectors, right? Whether it's new consumer brands. We have such a large number of very exciting consumer brands, whether it's in beauty and personal care, whether it's in food, whether it's in home appliances, whether it's in fashion, right? We have over 1,000 startups in agri-tech, right? Imagine that. I mean, that's like really, really interesting, right? We have a large number of companies, startups in financial services, in payments, in insurtech, in wealth management, in lending, right? Both consumer as well as SMBs, right? We have a huge wave, very, very interesting wave in the whole climate space, right? On the one end of that spectrum is electric vehicles, new battery chemistries, and so on and so forth. On the other end of the spectrum, you have a new set of biosciences companies like Absolute, that are really coming up with entirely new kinds of fertilizers and pesticides for that India's never really seen, right? So that's sort of one massive set of opportunities that are really focused on the Indian domestic market. But that is only half of the story, right? 40% of all new seed-funded companies that raise between, call it $500,000, so raise between 4 crores and $5 million, so 40 crores, right? Seed-funded companies that raise between 4 crores and 40 crores in the year 2022 were building for the world from day zero, right? So on the one hand, you have this large domestic opportunity, but we also have this extraordinary opportunity to build for the world. And we are almost at the tipping point today where, I think over the next year, we will cross the tipping point where more than half of new funded Indian startups are building for the world from day zero.
So if I may then, what is that single biggest theme, Rajan?
The single biggest theme for the year, not just in India, but globally, is AI. Right. So we do think we've had sort of zeitgeist moment in AI. I think the launch of OpenAI's launch of ChatGPT has really, I think, made sort of AI mainstream, top of mind, really become the zeitgeist today. And what we're seeing is, a new generation of companies that are being built. What's very interesting. What's very interesting is if you look at Surge, which is PeakXV Partners, right? We rebranded our firm to PeakXV Partners last week. Surge is our seed stage platform, and if you look at Surge, actually, we have close to 20 AI companies that we funded over the last 3 years, right? So we were investing in AI companies before sort of AI became the zeitgeist of the world, if you will. But AI really is going to be, if you ask me, one theme that's not just in India but globally that a lot of investors and founders are focusing on today, it would be AI.